Coming up in this show, I'm going to bring you my comments on the markets. Katie has trade planning with options. She's going to apply the askSlim charting method with option strategies in Visa. I'm going to show you a big picture update in silver, where it shows risk right now, but maybe a big opportunity later. And I'm going to show you our day trader and MCM. That's our market condition monitor that you now can try for free. And I'll bring you my analysis of the stock market. I'll show you multiple time frame analysis in the S&P 500, and we'll look at those market conditions using our Market Condition Monitor Pro. Fantastic apps that I'm going to show you.
Well, I'm going to the city and I'm going to do a city show. And I know all my fans want to learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're going to get it just right. I'll get inside your mind, we'll have a real good time. We're going to trade today, we got to trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market was modestly lower last week, but that hardly reflects the volatility we saw early in the week. On Monday, the yen surged and Japan stocks crashed. They were down 13% on the day, and the U.S. indexes followed suit. They were down 5% in pre-market, and that was actually the low for the week on that Monday morning. The yen carry trade was the cause, as for so many years, I mean it was like 20 years, that the negative interest rate policy in Japan gave investors the ability to borrow at zero and then take that money and invest it elsewhere. And that really did feed the bubble that we saw here in the U.S. stock market as the AI stock soared, tech stocks super strong, and of course the stock market gets up to a valuation that was just so wild at 200% of GDP. And that is what made the market very susceptible to some very big and sharp declines, as we saw. There was a flight to safety as the yields plunged on the treasuries and bonds jumped sharply to the upside. And there was actually talk of an emergency cut, maybe 50 basis points, by the Fed. Of course, that proved to be premature. On Tuesday and Wednesday, there was a calming in the markets as the yen then pulled back and Japanese stocks had a big recovery. And there were huge swings on both days here in the U.S. as rallies failed. In fact, on Wednesday, the S&P 500 early in the day was ahead 90 points. It was huge. And then it reversed and a big sell-off came and they went all the way down to minus 50. That was a 140-point swing there on Wednesday. If there's anything in the background that weighed on the semiconductors, it was the SMCI earnings came out, and that was a beat. And the revenues were in line, but margins were weaker, and they declared a stock split. The stock was up 3% early in the day, ended falling to minus 10% or worse, and that really weighed on the market. And as far as SMCI goes, it made a high in the last 12 months of 1,229 and fell this week as low as 479, now about $20 off the low as I do this show. Thursday, we saw the initial claims come out. They had fallen. Now, normally when initial claims fall, you know that the economy is stronger, and you would expect that bonds would rally, but there was so much fear about recession, so much talk about that, there was some relief. So when that news came out, bonds fell, the yen fell, and everything seemed good again. There was a huge move in the indexes. It was the best day of the year, certainly a relief rally, as we saw the S&P 500 jump 125 points The Dow up about 680 on the day. And then the Fed heads were out and saying, well, there is no emergency. So all of that pricing in of some potential of an emergency rate cut, well, that got priced back out of the markets, and things seem to calm down again. And here on Friday, the market is waffling in quite a tight range. S&Ps were maybe down 20, up 15, moving back and forth. The traders don't really know what to do after this week's big bungee jump that we saw down big early in the week. Some attempted rallies, rallies that failed, rallies that continued, and all over the place this week. And on Friday here, it's really kind of a firm day after trying to go to the downside, but here we are at midday right now as I'm doing this show, and still anything can happen here in the markets. So the stock market, our analysis was pointing to a decline into the first week of August. The magnitude of this decline was bigger than projected, certainly affected by what was going on in Japan and that reverse carry trade that we saw going on. But our timing was very much a bullseye regarding the timing of this decline. Projections have pointed to a rise into September or October and then moving down again. But the magnitude of this drop did damage to the market, and that shortens the rally period. It shortens it both in time, how long we think it will rebound, and in price, where originally we thought the market could get back up near the highs. Now we don't think so. So while we think that Monday's low is a good one, and outside of a lot of waffling back and forth, we should keep trying to go to the upside. But after this rebound, I think it can go much lower. And that's a market that peaks sometime in September and then falls very hard into that October-November timeframe. I'll show you that in the analysis that's coming up. For the week, well, we'll call the stock market right now down small. The Russell and the Dow were the worst of it, about 1% to the downside. But there was declines of 4 or 5% early in the week, so they did have a very good recovery. Bond market 30s, they lose about 2 points. TNX moves up. That's the 10-year yields, about 18 basis points. The range they saw this week was down as low as 367. That's on the futures contract, and as high as 4.02. So you could see that was a very wide range for yields. Now, the yield market probably will remain weak. In other words, we think that the yields will continue to want to move to the downside, that the bond market will continue to want to move to the upside. Days of relief, where the yen is weaker, will probably see the yield market be stronger. In other words, yields go up, bonds will go down. But if there is more panic, a buying in the yen that comes in, we'll see panic come back into the markets overall. Gold market loses about $17. That is rock solid. It's amazing how strong the gold market is. Silver, much weaker, along with the other metals, much weaker. And I'm going to give you a big picture review in silver in just a few minutes. And you will get a good sense for what I'm looking for in the silver market. Again, I think some weakness coming, but a good opportunity also coming. Dollar, small to the downside. I still think it's moving down over the next couple of weeks. The rebound we've seen here I don't think will hold. The oil market gains $2.20. That bounces based on Mideast tensions. And I still think the energy market, like crude, is in a very, very negative cyclical configuration. We show that to our members, and you got to watch Future Speak every single Wednesday. Ivy does a spectacular job with that, and you'll see why we think oil has a lot of trouble going forward. So I think it's pretty negative, and this rebound right now in oil has gotten it way up to the sell zone where we think it's going to turn around and then move back to the downside. That's my opening commentary for this week. Make sure you go to askSlim.com, look around, explore, get acquainted with us. Go to askSlim.com, go into the free stuff link and pull up Free Snapshot Lite, and you'll be able to get our daily analysis on the S&P 500. You're going to love that. Matt does a fantastic job. On YouTube, do subscribe to that channel and click the notification bell and like the video. Give it a thumbs up. On X, follow us at askSlim. Questions you have on anything I show here in our education and analysis, write to Matt at askSlim.com. Katie's going to show you something great here. She does fantastic analysis. And it says EWZ, but it's actually on Verizon. I forgot to change that. And she's going to combine our cycle analysis with option strategies in Visa. And you're going to see that analysis coming up right now. Make sure she's going to show you how to open an account at Tasty Trade through our website. That helps us and will certainly help you. So, Katie, show them.
Hi, this is Katie with askSlim, and this is Trade Planning with Options on August 8th, 2024. Today we're going to look at an options trade idea in Visa. Ticker symbol is V. First, we have our legal disclaimer. The options trades that I demo and follow up on are trade ideas. When I talk about closing, adjusting, or managing them, I'm educating around management techniques, best practices, theories around risk management and profit taking, and highlighting aspects of options trading that we encounter as we follow the trade ideas. This disclaimer is specifically related to options trading. For full legal information, please go to the askSlim website or email Matt at askSlim.com. Let's first get an overview by taking a look at this weekly chart of V. On the bottom, we have cycle brackets that are 27 bars in length to represent the average weekly cycle length. These vertical dotted lines show where the actual cycle lows occurred, and you can compare those to the ideal cycle brackets to gauge the consistency of these cycles. The blue vertical dotted lines over here on the right show the period of time of a few weeks before and after the ideal cycle trough, when we would expect the current cycle to form its low. That period of time is from October 21st to November 29th. Another thing to notice here is that we did have a series of positively configured cycles. Starting back here, positively configured means that the cycle ended higher than where it began. But something changed with this current cycle. Visa formed its intermediate low right here. Then it moved up to the top of the resistance zone, stalled there, and eventually broke down below that cycle low support. So that is a negatively configured cycle, and of course momentum, as shown by the reversal scout, is currently negative. It had turned positive when we came out of that intermediate cycle low. That helped us confirm that, and now we are firmly into a negative momentum situation. We do have some target levels here. The intermediate 127.2% extension is at 251.27. We've almost reached that level already. And the next level down is the 161.8% extension at 242.80. Again, the weekly cycle timing window is from mid-October to the end of November. Now over here on the daily chart, we have an average cycle length of 48 bars. And you'll notice a series of negatively configured cycles starting back over here, each ending lower than where they began. And the current cycle too has already broken below that cycle low support. It did get a bounce back up to the bottom of the resistance zone right there before declining again. Both the daily reversal scout and the slim ribbon are showing negative momentum, and we have a daily cycle timing window coming up from September 9th to September 17th. We are targeting this daily 100% extension level at about 250. So what we're looking for is for Visa to chop around in here and eventually make its way lower into the declining phase of this daily cycle. Tasty Trade is our preferred options trading platform. Please go to the askSlim homepage, hover over the Partners tab, and click on Tasty Trade. That will take you to a page where you can learn more about them. And if you choose to open an account with them through our link here, that will help you with a special bonus, and it does also help us. Now let's go over to Tasty Trade. Here I have Visa loaded into Tasty Trade. We have a high IV rank at 56.3. This implies a short premium strategy that will benefit from a drop in implied volatility. Let's go into the September monthly expiration cycle because that aligns quite well with that daily cycle timing window. I'm going to set up a call credit spread that's a bearish trade. It is the sale of an out-of-the-money call and then the purchase of a further out-of-the-money call to define our risk and reduce our cost basis. I'm going to go ahead and sell the 270 call, and I'm choosing that because it's close to the 30 delta level. I have a delta loaded in this column on Tasty Trade. These are customizable columns. And also because that level is near the highest level that Visa has traded in this current daily cycle. And we would not expect it to be able to take out that high, having broken below the cycle low support. So I'm going to sell that 270 call, and then we're going to buy a further out of the money call. And you can make your spread as wide as you like. I'm going to demonstrate a $10 wide spread, so that means I will be buying the 280 call. This nets us a credit of $2.26. That's our max profit. Max loss is the difference between the width of the spread and the credit collected. In this case, that's $774. Our probability of profit is 69%. We have just over 16 short deltas and a daily theta of $2.92. Here is what that risk graph looks like. We have no risk whatsoever to the downside. We just want Visa to stay below our short strike at 270 or at least below our break-even point, which is 272.26. That is our options trade idea today. I will update the options trade idea tracker and we'll follow up on this trade idea again next week to see how it is doing. As always, you can reach me on Discord or via email to katie@askSlim.com if you have questions.
This is a quick update of our big picture analysis on silver. We're going to look at the monthly, weekly, and daily analysis. And you're going to see that there's some downside risk now, but it's setting up a bullish opportunity for later. So we're going to take a quick look at this. We're going to start out with monthly chart and look at the weekly and daily. And remember, we do cycle analysis here at askSlim, and that means we're looking at the money flows, the rhythms of the market. And this is a monthly chart of silver going back 23 years. And there are just amazing harmonics in here. The harmonics, just like music, where it shows different time frames of movements of money coming in and money coming out. And the bigger the cycle right over here is really, it represents the longer term holders. The shorter ones are the shorter term holders. So what we're looking at right now is, well, we're in a spot where we're likely going to complete this minor cycle right over here, which is in this uptrend right there. Let me just zoom in quickly and you can see right in here that this minor cycle, and this dashed is the gold, so you can see there's a good alignment with gold and silver on the monthly chart, says that right now it's coming down into the buy zone with just a short period of time to go for this correction. And this configuration, this cycle right over here, shows that the corrective period is well above where this started, a bullish configuration. It says at very least the next rally or this next rising phase will get you back up to the highs. That's the highest probability, with a potential of getting up over here into the mid-30s sometime in this period out here into 2025. So this corrective period right over here is ending, and you can see this is labeled as a buy zone right over here as it makes that pullback. So that is a look at the monthly chart getting ready to complete the correction and move to the upside. Now there's a beautiful alignment in here of the weekly and daily charts, which are telling you something very similar. This is the weekly chart here on the left. This is the daily chart here on the right. So what you have here is this corrective period right over here matching up with gold also as they move down right over here with what looks like a few weeks to go. Now, these two blue lines are where you're looking at as the likely pullback time frame. In other words, this is the bottoming period right in here. And this says you might have another 2, 3, 4 weeks to go on the downside, very much in alignment with what we were looking for on the monthly chart. And you can see in here where this then points to gold and silver moving up in this period of strength, where all the monthly, weekly, and daily cycles will be aligned moving to the upside. So you can see in here, once this correction is over with, we have projected this rising phase. That should get silver back up into the 30s. Now, it might have to do a lot of work in here, and maybe this small cycle over here out into the beginning of the year, is where it kind of builds some bases right in here, and doesn't do that well this year, but then may turn up December, January, February out into here for that bigger upside move. So you can see in here, this is the corrective phase. You could see the askSlim reversal scout right over here, which is our momentum indicator on the weekly, did turn negative right over here. And then you had this kind of double top that formed, and you have negative momentum going on right over here. Here you have the daily chart, and you can see that the slim ribbon turning bearish and pointing down. The slim ribbon PO right over here give you another downside resumption signal. This is a level 4 indicator, and this points out about 2 or 3 weeks of further correction. So this is why I say that there is downside risk right now, because you have monthly, weekly, and daily all pointing to the downside. Certainly you could get silver down here to 26 or lower in these next few weeks, but then you get this upside move right over here where the cash flows change, the capitulation ends right in here, and you begin to build your base and come up out over here into this September period. So again, this cycle right over here, you could see the alignment with gold also, and that says that these next few weeks have downside risk, and same thing in the weekly, same thing in the monthly, but then after that, it sets up this period of strength after some base building period probably here in these next couple of months after you make this low. So right now we're going to call for further downside, maybe 26 in silver, and then after that moving to the upside potentially very significantly. That is your big picture analysis update on silver. This stock market analysis is coming right now. Projections on the S&P 500. First, it's this important information right here, and I think you're going to need to read this because it tells you about how we approach the market in our analysis and what that means for you as you apply it to your own trading and the important subject of trade ownership. You must take ownership of your own trades, on your entries, on your exits. That's how you're going to raise your probability of success. This is our special for this week. MCM Pro and Day Trader Services. You can get a free test drive. This started just this week. You don't need a credit card. You sign up absolutely for free, and you're going to get a couple weeks of using our great day trader service. So if you're a day trader, you're an intraday trader, you really have to see this. It's fantastic. You get our impulse monitor, which really shows you the what direction your likelihood, the most likelihood to get a big move in, a big impulse. You're going to see our whole cockpit with all of our apps in there, which you see right over here. That's our cockpit. And you're going to get our replay system where you can replay the entire day and just look at how you can improve your trade entries and exits based on that, and a whole resource training area. And the MCM Pro, I'm going to show you that in just a little bit. This is fantastic. You get to see when the conditions in all different trader styles change, and you can use our desktop alert app in order to be notified when those things change based on your particular trading style. and you'll get everything that's available in the MCM. So it's fantastic. I'll show that to you in just a little bit. You can sign up for that by going to askSlim.com or write Matt at askSlim.com for any information. This is the front page right there. You can see you go up here to test drive our tools for free, and you're going to be able to sign up for that. Yes, this is me, a picture of me right there, 1974, 50 years ago on the original CBOE floor. Yep, been at it for 50 years, and you can learn from my experiences and as the entire team has, and we've developed these great applications to really improve your trading. So give it a try. A couple weeks free, no credit card, MCM Pro, and the Day Trader service. Go to test drive our tools. I know you're going to love what you see. Stock market analysis, S&P 500. SPX cycle analysis and projections. Level 4 indicators is what we're going to look at also. And you will also get a peek at our MCM Pro market condition monitor and how that gives important information. So let's take a look now as we switch over to the charts. And there we go. So we're looking at SPX here. Now I'm just going to show you that this is a weekly, daily, a daily momentum, and a 2-hour intraday chart. This has our proprietary indicators on there, our option bias study on the bottom one here. This is our slim ribbon PO right over there on this daily chart. And here you have a market condition MCI, the market condition indicator, here on the 2-hour chart. I'm going to blow these up for you to see so we can see where we are and where we've come from and where we think we're going. All right, so this is the S&P 500. So what has happened in here is that we expected this declining phase right in here. Now, we thought it was going to be, 5% or so, but it was all practically double that as the market fell pretty hard. But perfect timing. You can see in here this minor cycle as it comes down right over here. That's what we expected. Now, what's happened is that you can see here where the minor cycle came down and the reversal scout stayed positive here. Minor cycle comes down, reversal scout stays positive. These are very strong cyclical conditions when you look at that. Here you see the minor cycle comes down in the middle and you have a negative momentum change over here. That's bad. That says that the rebound is likely to fail in the resistance area. So the resistance is, it's right now basically at the bottom of the resistance right here. This is about 53.30. This area up here is about 54.70. So this is the range that we would expect that it would get into and fail. The midpoint right over there about 5400. So if I look at it again, 5330, 5400, 5470 approximately, those are the resistance levels, and this is the zone that we expect it to fail in. So we're getting a rally, a pretty good rebound going on right now. As you see, the market was way down over here, down about 5% on the week, and comes back down to less than 1% down right now here at midday as it had a good rebound. But the upside potential is not very good right now. And this big decline came as the yen was exploding to the upside, and we expect the yen to remain volatile. There will be days when the yen is panicking to the upside again, and you're going to see our stock market moving down sharply on those days. But still, we likely are moving into this rising phase right over here. Now, we had originally thought, as I said in the beginning of the show, that the probabilities were pretty good that during this rally it was going to get back up into this resistance area here. However, that's changed because when you have this break that comes down to the 78.6%, it's a warning. And that says the next rally is very likely to fail in the resistance area that you see right over here. Then what happens after that is that the probability is very high that this cycle, when it gets into the declining phase, now this is the midpoint over here, late September, I don't think it's going to last there. I think it's going to be what we call a left-hand translation. So the peak is on the left side over here. and then moves down. But even if it's over here, it doesn't matter. We're going to get into the period of risk, and the probabilities of taking this low out, and substantially, are very high. So that means this rally is likely to fail, and this period over here may get you a decline of some significance. Now, this is 48.32, which is the monthly 38.2% level. Very important level right there to look at. Still, when you look at that, that would be a fairly big percentage of loss, and the potential to get down to 45.74 is pretty high, and that would probably be close to a bear market reading were that to have happened. So this is that big period of risk, and coming into the election time, and with the choices of our election and what's likely to be going on during that time frame, I wouldn't be surprised to see investors very, very nervous. So between the yen problems, between the market valuations, between the election, all of that, this is a very big period of risk, September through November, as we have it listed here. High probability of a failure in here, and then moving sharply to the downside. To me, this rally that we're in right now and in this zone over here in this next month are selling opportunities for investors and for active traders. Now let's move on as we move from here of the weekly, which again, your picture is you see negative momentum right over here, to the daily chart. Now, what we do in the daily chart is we build what's called the slim cloud, which is really putting in two channels. When it's, moves into the upper channel, you kind of know that decent amount of strength came in. If it moves into the lower channel, well, then you know that, that strength is failing. And this is a very similar resistant zone that we saw on the weekly. And here now getting into the bottom of that resistance. Again, this level up over here near 5,400. And it's very possible that it's going to make it to 5,400 in the next few weeks. Now, you can see in here that the option bias indicator is negative. And it had a bottom warning. It got to super oversold right in there and called for a bounce. And we're getting that bounce in here. If you look over here where this was all green, this said bias your option trades to the long side. This is over here is now saying bias your option trades to the short side. In other words, dips are buys in here, but rallies are sells right in here. When it's neutral yellow, you can barely see that, but here was a neutral area right over here where it was just changing from positive to negative. And right now, the option bias indicator is negative, and it is saying that it's pretty likely that the rallies that come into this zone up here are going to fail. That's around 5,330 to about 5,400 at the outside, 5,460, 5,470 up in that area there. You see the note here. This cycle has a high odds of being the first daily cycle in the new rising phase of the minor weekly cycle. So odds favor a positive configuration. A negative configuration would be very bearish. Now let me decipher that, tell you what that means. You can see in here that we're in the beginning of this rising phase on the weekly chart. Here, we have that upside movement in here. So since you're early in that weekly pattern, even though everything is negative, it's fairly likely that this cycle will end up higher than it started. So it started over here at 51.17. It's pretty likely with all the gyrations that go on in here that this will give you a positively configured cycle where it ends up higher than this level right over here and never gets below it. If it gets below 51.1926, it's going to be a horrible message, a very negative message. And were that to happen, it would tell us that this weekly condition over here is so negative it will not allow much of a rally, and that it is likely to decline in some severe way. We're going to look for the highest probability for it to fail up in here, pull down over here, make us get some support without making a new low, and then the next cycle over here get back to the upside and move into this mid-September period where that ultimate rebound peak is likely to set. Not likely to be here. It's more likely to be in this next cycle. So this analysis with negative momentum in here, but positive cycle action here, says to me range trading is likely to happen. Rallies fail, dips fail, it trades in a range, and trend trading is probably not the right type of trading unless you're using our day trader, which gives you intraday trends, which is what really you need to look for. So this is a look and the explanation for why we're probably in a range trading period right now. So that's what we have here, negative on the option bias indicator. And when you look here at the daily momentum, you can see that the slim ribbon PO on the bottom giving you all of these resumption signals for momentum right in here, and was green during this whole period and then turned neutral and now is turned red. You very often get failures when you get up into the slim ribbon right here, as you see happening right now. So there probably is not a lot of upside in here. And the top of this, which is the 21-day moving average right there, is 5,400, which is right in the middle of that resistance area that we talked about. Very high probability rallies will fail and then be moving back to the downside again trading in that range. And when I go to the 2-hour right over here, this is our MCI, market condition indicator. And when it gets, it moves between plus 100 and minus 100. Again, this is a level 4 indicator. And when it gets to the 25, it's a test. And if it were able to cross under the minus 25, it says that the longer term inputs are negative. It's giving you a negative signal. Right now, it's been able to hold just above that minus 25. So it's not quite giving us the signal yet. So right now, this is neutral. But if this then moves underneath the minus 25, that's going to be a negative signal for the stock market. So again, we'll move back through this, just starting an uptrend in the minor cycle, momentum negative, likely to fail in this resistance zone. On the daily, negative as far as looking at the option bias indicator. And again, very likely to fail in the middle somewhere in here of this right over here. Negative momentum conditions as clearly seen right over there. That is a look at the SPX and then analysis, which says be careful because the upside is not likely to hold. And there's a lot more downside risk than there is upside potential. It just, right now, it's probably more neutral than anything. Let's take a look here as we look at our market condition monitor, the MCI. Now, if you're brand new, you can get, earlier in the show, I told you how you could get a 2-week free peek at this, no credit card necessary to use it. It is an unbelievable application. We built in our algorithms in here, and you can see in here as you look at the S&P 500, QQQ, IWM, DAI, and right now the settings that are on here I have on short term. So this says on the short term, you're kind of neutral on the S&P 500 and the QQQ. See that up arrow, that's the improvement. And this gives you the change log, and here is when things change. You can see that. So you have very much neutral conditions. The IWM, which was stronger before in the short term, is now bearish. If you're an intraday, if you're a swing trader over a few days, that would be the near term right over here. So you want to kind of dial it into your trader style, and you can see in here that you're kind of slightly neutral to slightly bullish on the S&P 500, the IWM. And in the diamonds, you are, slightly bullish to neutral. This is not, not anything that's really giving you anything really tradable when you look at this because they're kind of neutral. They're not really giving you anything, and that's what I would expect based on the analysis that I'm seeing right now. Of course, if you're an intraday trader, that's right over here. And right now you can see that, you get a market that's trying to rebound, so it's giving you bullish index. But this is all intraday, so this is only for day traders right now. And then this is the weeklies on the intermediate here, weekly out to monthly. And you can see in here that you're neutral to slightly bearish. So let's go back to the short term here. And let's just look at some of these conditions in here in some stocks and see which are the best, which are the worst. Here's your very bullish ones in here right now. That you can see: BABA, XLP, TMAS, XLRE, XLU. Of course, all the money is going into the utilities because of a flight to safety. So these are the ones that are very bullish, and these are the ones right over here that are very bearish. Corn, soybeans, Disney. We've seen the problems that has. This is the solar stock ETF, as you can see right there. I'm just going to scroll down a little bit here so you can see the ones that are bearish. Katie did a bearish trade in Visa today that you can see. So this is an application that's unbelievable. And on top of that, you can download our alert application, our desktop application, and you can just ask it to notify of when you want it to tell you when it's very bearish, neutral, any of these, and any of the time frames when you dial in your own trader style in those time frames, and then it will alert you right on your desktop as to when those things happen. So you don't really have to monitor everything because our system will tell you when things happen. So that's looking here at the different trade setup conditions in here. You can also get the time frame view where you look at the individual time frames right here. And these are the conditions, as you can see. In the 2 hour, it tells you when those conditions have changed right there, and here's your daily, as you can see there. So you can just see the conditions in here, and look for the S&P 500, QQQ, WMDI, Apple. They're all negative when you look at that on a daily chart, so don't be surprised if these upside rallies begin to fail. That is a look at the market condition monitor, the pro version, which you can try out right now simply by going to the top of our website, click test drive our tools for free, and you will then be able to sign up for a couple of weeks free on this and our day trader, which is just fantastic. So that's a look at that. This is a look at the stock market that we talked about. And overall, we're looking for stocks to be range bound, have some good upside pops that fail, some good downside moves that don't stay to the downside, and a choppy market, I believe, going forward here for maybe a number of weeks. Don't forget to go to askSlim.com, look around, get acquainted, sign up for a free Snapshot Lite, which you can just go into our free stuff and pull that down and click on Snapshot Lite, and it will then let you sign up for free. Get our analysis on the S&P 500 every day. On YouTube, subscribe to the channel, click the notification bell, and like this video. Give it a thumbs up, and follow us on X at askSlim. Questions you may have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to